Good morning, folks, and welcome back to Almus Market Mornings. The festive season is upon us. Markets having a Santa rally, at least in the space of precious metals, silver, gold, and platinum shining quite brightly. But as things are quietening down, there is a lot of action in the domestic markets. Now, premiums for USD INR have seen a significant spike up, especially in the near term. Just for context, the premium for January end saw a spike of almost 25 paise in yesterday's trading before cooling off. RBI has brought up some heavy liquidity infusion measures, including OMO purchases and another buy-sell swap. Let's understand all this from JK. Morning, JK. What's the central bank trying to do with these kind of measures? Would it help bring the premiums lower?
Good morning, Swaraj. Yeah, I think the year-end liquidity pressure is very high, and that's the reason why market is trying to convert the dollar holdings into the rupees in by way of swap, and they are not selling off the dollars, but they are swapping the dollars for future date, and which means they're still holding a long view on the dollar. Also, there is a huge paying pressure from the many of the contracts which are maturing in December, and usually December is a heavy month in terms of contract maturity, particularly for the long-term loan holders, etc. So that is why even after announcing many measures in the monetary policy, we have seen more measures announced by RBI. They don't want the system to see a artificial spike or a big unreasonable spike in the money market rates, and that's the reason why they are cooling off things. And so I think this is going to be there for the next few days, the pressure. But after that, we should see, I think, a cool off. And premiums, of course, today have already come off a bit after some receiving by the nationalized banks. As you said, the premiums are quite high, more than 3% for 1 year, and 1 month premium at 48 paisa, and that's staggering. So I think these will not sustain. Market will cool off after the flurry of covering for the liquidity that is seeing that. At the same time, the spot is somewhat subdued, moving in about 20 paisa range. Importantly, after RBI brought down the spot by about 2% from 91.10 to 89.20 by two different instances of intervention, market has not followed through that. There is no fundamental reason for it to follow through on that selling. More buying is seen from importers and even POC oil companies. Even the FI numbers, which are looking positive for recently for about a week or so, they have turned negative today. So overall, that pressure on the rupee is there, but it is rightly milder now compared to what it was earlier. So I think even the rupee will stay in this range between 89 and 90. Break of 89.20 might see some downward pressure, but that really requires some positive news. On the upside, 91.10 break will again encourage more buying. So that is a level where I think even RBI might make its presence felt once again. On the global market, there have been a tremendous movement in gold and silver. Gold made a new high today, almost 4,500, which we mentioned a couple of days back. And the silver, of course, crossed even 70 level. Now, what we are seeing, at least for today, is some serious profit taking coming in. Not that the trend is changing, but guys who have made very good money on these metals are seen taking profits. There's always the risk when you're running a good position in the holiday period. Something happens and you come and see the profits eroded. So that is the only philosophy behind what they are doing right now. On the data side, of course, we had a heavy slate of data in the US, but this is of just before we get into a slumber. In the main data that we saw was on the GDP numbers, which came at 4.3% in third quarter. And although we are in December already, it is still only the first look at the GDP number, because we had a shutdown of the US government, so there was no data collection happening in October and best part of November also. So that is why the first look at the GDP number is released at 4.3%. On the face of it, no doubt it looks very impressive, but I'm not getting carried away. The data seems to be quite nuanced, and much of the consumer spending acceleration resulted from a rush to buy electrical vehicles. That's one of the factors, because on September 30th, there was an expiration of tax credits, and the government has cancelled the tax credits for uh, vehicles, electrical vehicles. Also, the survey shows that consumer spending is being driven by higher income households, thanks to the stock market boom that has seen the wealth effect. And the middle and the lower income consumers are really struggling among, with the higher cost of living resulting from tariffs. And even the analysis also says that large corporations, they have managed to withstand the blow from import duties, but and of course they are also investing huge amount in artificial intelligence. The small businesses are really struggling. So there is a the divergence within the uh, data or in the economy itself. So it's very difficult to make a definite conclusion on final course that the economy will take. And we know that employment has been weak. We also had durable goods also, which went into negative for the month of October. And even industrial production was slightly negative for the month of October. And we are still dealing with some of the October numbers, and we are not even seeing the November numbers also. So that means still need to. I think in January by middle we should get a clearer picture of the economy, both on inflation, growth, and also employment factors. GDP number on the face of it very strong, but the details show that it's quite nuanced. Also, the price index, which goes into the calculation of GDP, because what we are looking at is the real GDP, and so that comes to higher at 3.7% compared to 2.1% for the quarter, and the PCA prices were at 2.9% versus 2.6%. So even the GDP calculation is helped by higher inflation as well. Consumer confidence was again down by 3.8%. This is coming lower compared to the November number. Of course, the numbers have been overall drifting down. The confidence is being affected by higher inflation and the cost of living that the consumers are facing. Nothing major to take away from these numbers. Some amount of deep dive that you need to look into these numbers. And then, of course, you also have to study how the later revisions to these numbers come, because, as I said, it's the first reading, and the latter readings might paint a different picture. So that is it. We are, getting into the Christmas Eve tomorrow, and not much is seen in terms of data slate. And definitely not the Western world. We have the China and the Japanese market will be open. There will be some data from Japan on the 26th, important data from Japan, but then we may not have many participants to react to those numbers. That's it. So we will look ahead to what the market looks for in the coming years. In the coming days, we try to just take a different segment of the markets and see how we look at it in the coming year. Thank you.
Thank you, JK. And for sure, as we go into next week before the year end, we'll have a year end wrap, especially with this podcast as to what happened during this year and what to look forward to when it comes next year. So overall, some liquidity measures by RBI. We have some seasonal factors playing in, and a lot of dollar holdings getting converted into rupee by way of swaps. So pre and also the premium paying pressure which exists. All of these seasonal factors, RBI is putting in more liquidity to manage it. The premiums which have spiked quite unsustainable at the levels they have spiked. So that should correct in a few days' time. Spot USDINR quite range bound, likely to be in the range unless some decisive levels are broken. In the global markets, we are seeing a tremendous movement in precious metals, and the data from the US, where the headline GDP was at 4.3% for Q3. As JK mentioned, on the face of it, looks very nice, but it may be tricky to read. We had the shutdown, and also because of a lot of very specific factors like rush to buy EVs due to expiration of tax credits, and also helped by the higher price index that goes into GDP calculation. Well, that's it from us today. Thanks for listening. Wishing all of you a very happy holiday season, and we will catch up on directly on Monday now with the fresh round of updates. Thanks for
That
listening.
is the 27th we'll
Correct,
decide.
correct. Since 26th is likely to be, a dull day in trading.